Hello friends, today is my 29th presentation for the team of finance and accounts, and subject is compiling of 100 numbers of ethical issues in preparing the P&L accounts. This is considering a typical manufacturing and selling organization. Overall, this is my 60th presentation considering all the YouTube presentations I have made so far. What I plan to include in this presentation are overview of the 63 types of main heads for these P&L account, and listing of 100 unethical issues identified, just the numbers. Now I'll be covering these for various heads like income from sales and revenue, 17 types of expense heads, purchase related expenses, 4 types of expense heads, employee costs, 10 types of expense heads, manufacturing cost related, 6 types of expense heads, sales and marketing related, 6 types of expense heads, finance accounts related, 7 types, which have 51 expense heads in detail, and overheads 13 types, which have got 56 subheads in detail. Now this is an overview of the 63 type of main heads which I am just sharing. The row number 1, it is income and revenue. There are the last column you can find there are 9 ethical issues which have been identified, and the purchase expense related 13 issues have been identified as unethical, employee cost related 11 issues, manufacturing cost related 13 issues, sales and marketing related 9 issues, ethical issues, and finance and accounts related 28 issues, and overhead 17 issues, totaling to 100 issues. Now let me begin with income and sales revenue listing. Now these are the broad heads which are covered. These are like income from sales revenue and products and spares, income from sales revenue services, incentive paid to channel partners and customers, rebate discounts given to channel partners, customers, revenue towards export incentives, revenue towards dividend income from investments, revenue towards sale of investments, revenue towards sale of investment in foreign currency, revenue towards interest for deposits, revenue towards interest on loan and advances given by our company, revenue towards interest on receivables, revenue towards interest income on current investments in subsidiaries or JVs or associate companies, revenue towards rental income on properties, revenue towards rental income on equipment leased, revenue towards the sale of fixed assets, revenue towards the sale of scrap, revenue towards the miscellaneous income. Now all these 17 different type of heads have been studied, and subsequently the compilation has been done. Now, ethical issues in reporting of income from sales and revenue are, uh, as I had shared, there are 9 issues primarily. Uh, this is revenue recognition is done before it is earned, fake sales, under-reporting sales returns, which is very important, and holding back the revenue recognition. Ethical issues common to each of these 17 heads are, so I'm not duplicating these. One is the inaccurate recording and overstating or understating of the sales and income, improper allocation of this income, omission among the different streams or revenue or services or product segments, etc. Then omission of the some cost related to this, determining that. Disclosures, in fact it is the omission of some sales as well as costs, disclosure of the disclosure requirements not complied with as per the statutory requirements, and misclassification of the sales. Now purchase related expenses, there are 4 types which are incorporated here. One is the purchase of raw materials, purchase through imports, purchase through traded goods, and purchase of outsourced services. Ethical issues are, number 1, inaccurate material cost valuation vis-a-vis agreed purchase orders and agreements. Incorrect. Number 2 is incorrect determination of the cost of goods sold. Number 3 is fake inventory records and using inconsistent valuation methods. Now, common ethical issues to each of these 4 heads of purchase expenses are inaccurate recording, overstating or understating of the expenses, as well as inventory, assigning expenses to incorrect categories of the materials. As I've shared that there are 4 different type of materials, within that there are hundreds of different subcategories, so assigning of expenses to incorrect categories, omission of cost, insufficient disclosures vis-a-vis the statutory requirement, and inaccurate classification amongst the different types of materials purchased. Now the materials can be for the production, this can be for the indents against the indents. This can be maintenance item, this can be food and articles, it can be equipment, etc., etc. So inaccurate classification amongst this type of materials. uh, there are some strategy aspects which I have listed. One is the accounting standard one, which is of the Institute of Chartered Accountants of India, which is related to the disclosure of the accounting policies, making compromises on that. Accounting standard number two related to the valuation of the inventories. There is a note number 9.5.1 related to the cost of materials consumed. This is based on the part of the guidance note on the revised Schedule 6 of the Companies Act 1956, which elaborates the requirement to be complied with while making this compilation of the cost of materials. Similarly, note number 9.5.2 related to the purchase of stock in trade, and note number 9.5.3 related to the changes in inventories of finished goods, working process, and stock in trade. So you can refer to this guidance note to the revised Schedule 6 to the Companies Act 1956. Now, there are employee costs. There are 10 heads which are listed: salaries, wages, bonus and incentives, welfare expenses, post-employment expenses, contribution to the PF, contribution to the gratuity, contribution to the superannuation fund, contribution to ESIC, and other employee investment. These all are part of the employee cost, and these need to be incorporated as an expense head in the P&L account. So, ethical issues are personal reimbursement are treated as business expenses, inadequate documentation of the employee cost, incorrect TDS on payroll, and incorrect contribution to the provident fund and ESIC, etc. Now, ethical issues which are common to the 10 types of heads of employees expenses which I have shared above, uh, including inaccurate recording, overstating or understating of the employee cost, improper allocation of the employee cost in different periods, omission of the few costs, insufficient disclosures, for example, undisclosed liabilities of expenses, and misclassifying expenses. Now, compromise on the following strategies aspects. One is the accounting standard 15 of the ICAI, which is related to the employee benefits, how to compute them, and note number 9.554 related to the employee benefits, again being a part of the guidance note to the Companies Act. Manufacturing cost related listing of 6 types. These are primarily consumption of stores, spares, loose tools, subcontracting expenses, power and fuel, water, inward freight and forwarding, etc. Now, ethical issues are inappropriate capitalization versus expensing, hiding or incorrect reporting of the few costs like power, water, energy costs. Number 3, inaccurate computation of the costs such as direct costs related to the contractor job work charges, transportation costs, insurance cost, engineering, consulting and software development costs, etc. Then similarly, inaccurate computation of the costs which are indirect costs such as inspection of the quality control materials, engineering and technical support, project management fees, GST and duties, etc. Now, other unethical issues are inaccurate recording, overstating or understating of the manufacturing expenses of different 6 types which I have mentioned, improper allocation of the cost, omission of the few costs, insufficient disclosures vis-a-vis the expense rates as per the statutory requirements, and miscellaneous misclassification of the stores, spares, and loose tools. Now, compromising on the various statutory aspects are accounting standard number 10, which is related to the property, plant and equipment, accounting standard 18 related to the party disclosures, accounting standard number 24 is discontinuing operations, and note number 9.5.1 is related to the depreciation and amortization expenses, and note number 9.5.7 is related to the expenses related to the manufacturing, being a part of the guidance note on the revised Schedule 6 to the Companies Act 1956. Sales and marketing related expenses. 6 types have been listed: consumption of packing material, outward freight and forwarding, business promotion like through print media or barter, business promotion hoarding or billboards, business promotion say through TV channels, business promotion through digital medias like Google or Facebook, etc., etc., LinkedIn, etc. Now, ethical issues are one is inaccurate estimation of the reporting of the consumption of packing material, capitalization of the packing design and development costs rather than expensing it off, computing the freight and forwarding costs. That means the outward forwarding the costs on service providers bill rather than approved agreements with the transporters, shipping and airlines. Reporting cost of advertisements sales promotion agencies based on the advertisements TV channels bills without validation of expenses, like validation of the following, like whether the hoarding display was there or not, whether the TV channels logins are available or not, and duration of displays at the designated places or during designation time for in the case of TV channels. Then accepted quality of the creatives, design and final holdings, and rate and fees as per agreements without validation of this, recording the expenses in the P&L account. Other are inaccurate recording or overstating of the common issues are overstating and understating of expenses in each of the 6 types of heads, improper allocation of the cost, expense classification errors, omission of the few costs, and insufficient disclosures vis-a-vis requirements. Now, finance and accounts related expenses listing of 7 types. Here it is done little bit more detail. There are 51 subheads of the expenses which have been considered, and these 51 subheads of expenses, for details you can refer to my earlier YouTube presentation number 26th, presented on 30th April on my YouTube channel. Now there the heads are, the key 7 types are interest on borrowings, payment of taxes, foreign currency transactions, loss, share issues expenses, fixed deposit interest, depreciation, operations of discontinued operations. Ethical issues reporting of F&A. Now these are about 28 issues, so I am just sharing one by one. One is reporting inflated interest on the borrowings, misclassification of the borrowing cost by capitalizing, reporting long-term borrowing costs as operating expenses, understanding underestimating the tax liabilities by applying incorrect tax rates, improper accounting of the deferred taxes, manipulating and under reporting of the taxes, misrepresentation of the exchange loss, incorrectly classifying share issuance expenses as operating expenses, manipulating timing and recognition of the expenses, misstatement of the interest expenses on fixed deposits, improper accrual accounting, manipulation of the capitalization policy, accelerated or slow depreciation rates, classifying major repair expenses as minor or vice versa, delaying or under-reporting cost of discontinued operations. Common unethical issues are inaccurate recording or manipulating the expenses by overstating or understating, misclassifying of the expenses, and improper allocation of the F&A cost, omission of the few cost, insufficient disclosure, for example, tax liabilities. Compromise on the various accounting standards are like accounting standard 1, which is related to the disclosure of accounting policies, the 11 effect of changes in foreign exchange rates, accounting standard 16 is borrowing cost, accounting standard 19 is leases, accounting standard 22 is accounting of taxes on income, and 24 is discontinuing operations. And then there are some notes attached to the guidance note to the revised schedule 6, which are 9.5.5, which is related to the interest expenses, borrowing costs, and foreign currency gain loss, and number 2 is depreciation and amortization expenses covered in the note number 9.5.56. Here please appreciate that the expense heads related to the balance sheet are not covered here. It is primarily focusing on the profit and loss account. In fact, all the accounting standards which are announced, they need to be incorporated. Here I have indicated based on the expense heads which I have covered in this slide. Overhead expenses. There are 13 types of overheads which have in turn 56 subheads within those 13 types. These are lease rent paid on assets taken on hire, repair and maintenance of buildings, machines, others, insurances, communications, travel and conveyance, printing and stationery, legal and professional expenses, business and entertainment expenses, company maintained guest houses, donation and others. Now for this listing of these 56 subheads of expenses, you can please refer to my earlier 27th and 28th presentation made on May 8th and May 13th. Now ethical issues reporting of the overhead related expenses, fake lease or overstated lease rentals, fictitious repairs costs to buildings or machinery or others, overstated costs, fake insurance or other understating the insurance claim losses. Fake insurance means some insurance is also not alright. Personal expenses included in the communication cost, personal trip cost included in this cost, exorbitant travel expenses, personal expenses included in the cost of office supplies, stationery, printing, resources, etc., fictitious legal and professional fees, extravagant entertainment expenses included in this P&L account. Expenses for personal use in the company maintained guest house, fake donations, all taken as a part of this cost. Ethical issues to each of the 13 types of overhead expenses are inaccurate recording or overstating or understating expenses, improper allocation of the overhead cost, omission of few costs, insufficient disclosures, for example, tax liabilities or contingent liabilities related to the party transactions, and misclassifying expenses. Now, please refer to my second book titled Profitability and Ethics Essential Ingredients for Business Success. The book has been listed in the Amazon as per the links which I have indicated, both India and international. You can also refer to some of the blogs on my website address which I have given. Please refer to the second category, which is all industry and not the real estate industry. You can also refer to some of the articles of interest on the following Facebook and LinkedIn. Thank you very much.